So, as expected, the ECB held their policy rate unchanged at 4% at today's policy rate meeting. They also retained their existing language that interest rates would need to be maintained for a sufficient duration in order to get inflation durably back to their 2% inflation target. That said, we think there were two notable bits of news coming out of today's meeting. The first bit of news was coming from ECB's President Lagarde, where she dropped a pretty big hint during the press conference that the first rate cut for the ECB was likely to come in June. And as she explained, by then the Governing Council should have a sufficient amount of evidence to suggest that not only is headline inflation falling back, but underlying domestically generated inflation and wages are easing as well. The second bit of news that came out of today is that alongside the policy decision, the ECB also published updated staff economic projections. And these showed that inflation is now expected to fall below the ECB's 2% inflation target over the forecast horizon, a pretty strong steer that interest rates do need to come down from here. Now, that said, of course, markets have been pricing in these cuts well before today's policy meeting. But with these additional steers and guidance that we got from the ECB today, there was a brief rally in European rates.